Hi there, it's Sergey. Today you will learn how to start investing and why it's a crucial step in building your financial future and freedom, and to not be dependent on your 9 to 5 job or something like that. So stay here and I will show you what's the difference between the different assets and why should you diversify your portfolio and not try to invest everything in some new coin that appeared recently. So let's talk about benefits of investing. First of all, it's a potential for long-term growth because, as you know, stocks are constantly growing. I mean, if you take the distance like 10, 15 years or something, and say if you bought the Apple stock or Microsoft like 20 years ago or something, I mean, maybe not you, but your parents, and the value of that investment would be like maybe 1000% higher, and no bank can give you such performance because usually savings like 1% a year or something. So that's one of the reasons. If you invest in a broad market like S&P 500, statistically it's about 10% a year. But the main thing about benefits, it's compounding. So if you didn't take the dividends or percentage that you got from your investment and you reinvest this like dividends again, that's what is called compounding, and you will get percent on your percent, and that way your investment will be bigger and bigger and bigger. And yeah, that's the way how to achieve your financial freedom sooner than later. And I was talking about kind of standard investments into stocks or S&P 500 index. If you would go, let's say, into Bitcoin 10 years ago, but for sure nobody knew at the time that it will go so crazily, like thousands and thousands of percent. But still, this is a good idea to just keep a good habit and invest every month some percent of your income. Now let's talk about types of investments. I already mentioned S&P 500 and stocks, so let's start from stocks. It would be easier to understand. Stocks, it's a part of the company, and when you buy in a stock, you believe in the company, whatever they produce, and then that's the way how do you make money. You give them money to like increase production or improve production so they can sell more products, and they will get more money, and as a dividend you will get part of that money. And also because the company is doing good, usually their stock is going up, so you also make money on this rise of the stock price. I mentioned as well as P500, so just taken from the name 500, this is 500 biggest companies in the US, like looking at the market cap, I mean market capitalization for those who don't know what's that. And the simplest way, according to Warren Buffett and other famous investors, for people who are really far away from financial world, is just to buy S&P 500, and that would be kind of safest bet. And don't try to pick manually some stocks, because many people will try to buy some new fancy stocks, I mean stocks of the companies that they know really little about, and then that company just go down. I mean the stock of the company go down because of some bad news, and yeah, that's the way how things can get worse, and that's why S&P 500 is better. Then we have bonds. Bonds is opposite to stocks. This is a loan to the company or government. Usually it's government, no, not the company. So it works the same like you have a loan for your car or your apartment. It's the same thing. You are giving some money to the company or government, and then you expect to get your fixed percentage like every month or every year. Usually it's like a year, but you get the idea. Another thing is commodities. So as you know, the most known ones are oil and gas, and yeah, recently gas is really went to skies, and whoever bought gas like a year ago or 2 years ago, yeah, they probably made some money. But after situation is stabilized, the gas prices went to the normal, and same for oil. But it's not limited to gas or oil. You have a lot of like sugar or maybe cocoa, or yeah, there are a lot of different commodities. So this is basically what you eat, or what you how to say, the fossils, that word I was looking for. So you get the idea about commodities. And now let's move to the next one, which are ETFs. ETF stands for Exchange Traded Fund, and they are essentially just a collection of stocks for different regions or different size, and yeah, maybe different sectors. Also, there are ETFs for gold or for silver or something. So there are literally all kinds of ETFs, and the main reason why would you buy ETF instead of just stock or just index, because indexes, they are kind of limited. There are index like SP 500, some index for European region, some Asian region, Australia, also indexes for each major company in Europe, like Germany index or France or Spain, but that's it. So maybe you can count like up to 50 indexes, maybe 100 maximum, but there are several thousands ETFs, and also they can be bearish ETFs. It means they are targeted the opposite direction. So let's say if you think that something will go down, let's say price of a gas or something, so you can buy ETFs. So you are technically buying, not selling. And because this is an inverse ETF, you will be making money when the price of the underlying asset will go down. But yeah, we will get there. So that's why would you choose ETFs compared to stocks or something. And the next one is cryptocurrencies. So we already know about Bitcoin and maybe Ethereum, but already I saw about 20,000 cryptocurrencies already created, invented. Most of them are just for, I don't know, like money making or whatever. They do not have any value, and only maybe 100, maybe a little bit more, are more or less safe investment. So yeah, that's just another thing where you can invest into and try your luck if you can make some money. But you got the idea. And also real estate. So with real estate, you have two options. One is just like directly go and buy some apartment and then give it for rent, and that way you will make some money. Or you can invest in ETFs, which is related to real estate. So they call it REIT. Sorry for my pronunciation, as I'm not native speaker. But idea of these companies that they are buying like a lot of apartments. They can be business apartment or just for renting, and then so this is their main business. And then by this like renting like apartment to the people, they are making money, and you can get some money from all this business. So same like with other ETFs or with other stock. Now let's talk about investing strategy. The simplest one, which one I already mentioned to you, is dollar cost averaging. This is when you just take some amount of money, usually the same amount of money, or you can just take a percentage of your income every month, and regardless of prices, you will buy the asset. So if you take, for example, SP 500, and you have, for example, $1,000 per month, so you will take $100 dollars and invest this $100 every month into SP 500. Don't look at the price. You just when you have this money, you invest. You can do this with different assets. For example, if you believe in crypto or just like crypto, you can do the same with Bitcoin. But you got the idea. So this is a dollar cost averaging strategy which really works. The other two strategies is growth and value investing. Value investing, when you take the biggest companies like Microsoft or Apple, there are so little chance that they will break or something bad will happen. So you invest into like a really biggest companies. Their stock might go down for a while, but after some time it's come back to normal. And if you look at the 5-10 years distance, they are usually just going up. So that's what's called value investing. Growth investing, it's a bit different approach. When you try to find some candidates who will rise in the future, so it kind of startups that are recently went to the IPO and listed on the exchange, and that's what's called growth investing. And you invest in those companies and just believe in their growth. And I would say such investments more volatile, and the horizon of like getting stable is longer. So it's something like you invest now and expect good money in 10 years or something, because most likely this 2, 3, 5 years the price will go up and down. And yeah, that's just how it is usually with value investing. Growth investing. Now let's talk about research and then go through the same list. If you want to invest in stocks, you need to take a look at their financial statements, not just graph that price is going up. This is nice, that's cool, but that's not the way how would you select a good stock. You need to take a look at the financials. There are different sites that can help you, such as Finviz or Yahoo Money, maybe MSN Money, and kind of a lot of stock screeners where you can put some sliders, or they have predefined presets. Just show your company without any debts or with low debt and a lot of assets, but that will be a different topic. I will make a separate video about that. So basically selecting the company, it's about going into their financials and doing proper analysis, and then based on this analysis you decide for yourself, is it good or no to buy that company, stock of that company. Next one is bonds. More or less the same as with stocks, but this time you need to check if you are going to give money to the company or to the government. So why they are kind of asking for money, is there any like troubles or something, and how can you get this money back, because there are different bonds with maturity to like 3, 5, 10 years or something. And nowadays I would say bonds is not as so interesting investment. It's more like, I would say, for diversification rather than trying to make some money. So yeah, that's why I have about like 3-5% of bonds in my portfolio, not like 40 or something. The next one is indexes. With indexes, it's the same about diversification. The biggest one, major, is SP 500. And yeah, that's where usually most people invest into. But if you want to have money not in just one country but in different ones, it's a good idea to put some money into European stocks and maybe Chinese stocks, or just Asia, I would say. And yeah, that's the way how you can spread your money across the world. And yeah, there is also Australia index, so you can invest in different indexes according to your needs, and yeah, just see that there should not be a lot of money invested in like one index or something. The next one is cryptocurrency. Same here, but because the cryptocurrency is even more volatile, you should be really careful about investing into something other than Bitcoin or Ethereum, because Usually some crypto is pumping up, like a Dogecoin or Shiba Coin. Yeah, everybody is, wow, nice, this is a cool, let me invest into this like meme coin, and then the price is going down like 95%, and that's what is called FOMO effect, like fear of missing out. So I would say with crypto, stay with the top 3, top 10 maximum, and also it should be a really small part of your investment and not just like a 100% or something. The next one is commodities. It's same as bonds, I would say. It's more for diversification, not for making money. They are not really correlated with SP 500. That's why you might just look when the price is going down, really, like it was in 2020 with oil prices. It went down, I think, to $6 or $5 or something, I saw. So it was like really bottom, and then it's went up maybe 30 times or something. So yeah, it was crazy. And yeah, sorry, maybe not 30, but you got the idea. It for sure it was more than 10 times. And yeah, so that's the another way how can you diversify your portfolio, but by investing in the in commodities. And like way how you can do that properly, you can like research and like where it's how say they produced, and maybe any problems in that direction or in this in the industry. And another thing, how you can invest or do the research, you can take a look about different ETFs. So you might buy let's say silver. You can buy a ETF on silver, or you can buy ETF of a stock, or sorry, I would say ETF for silver producing companies, something like that. So there are a bunch of ideas how you can invest in different assets, but they just sharing some ideas. Sorry, forgot to mention real estate. So same here, especially if you are really going to buy yourself. So you need to check if there is any planned demand on that location or type of business or type of apartments that you are going to buy. And it's much more how say the hard research you need to do compared to if you are going to buy just REIT, which is ETF in real estate. I wouldn't do myself any real estate investments, only buy some REITs, and that should be more or less enough. But yeah, for those who are in that business, they know that this is like a crazy. You can make a good money when you let's say, for example, if you bought an apartment or some I don't know, maybe building, if you have a lot of money in Austin, in Texas, and now like everybody is moving there. A lot of businesses like move it because of their low taxes. So you can sell that and make a good money. But yeah, it's just another thing you can think about before investing into real estate. And here are another tips or tricks I can give you about investing. So don't try to time the market, because over trading or over investing, like trying to make $3 and like today I will buy, tomorrow I will sell. Yeah, it's just a lot of hustle, but that's not the way how you would make money, and that's called time the market. Because on average, even myself, I checked it with my friend, and he just did nothing, and I did a lot of like changes, trades, and we made more or less the same amount of money for the last year. And yeah, that's the thing. So don't overtrade. If you invest in stocks and like ETFs, whatever like stock related or company related, do your research and double check that you are not investing too much into single asset or a single company, because I remember NIO, for example. Everybody was saying, "Oh, okay, NIO is the next Tesla, and the price will go up." So I invested quite heavily into that, and then price is just holds still for a year or even like 1.5, and while it's okay, good, maybe after some time it will go up, but just remember the rule. Don't invest over 5% into single, I would say, asset type or something. If we are talking about companies, my personal rule is no more than 1% of all your money into one company, because whatever company it can be, maybe it's the most beautiful, most prominent company, like Tesla was in the past, making hundreds of percent, but yeah, you never know when the stock or price of the asset will go down, and same happened with Bitcoin, so it doesn't matter. Just remember the rule, no more than 1%. That's basically it. And last advice I can give you about portfolio rebalancing. For example, if you invested in Bitcoin like a half a year ago and now it's made about 50%, and you should invest more into different assets, not Bitcoin, because if you do the DCA, like dollar cost averaging, and just buy some assets, so you basically buying those assets that are less in your portfolio. For example, Bitcoin now about 40% of your portfolio, and you have also stocks and ETFs, maybe some indexes. So you should buy whatever is less in your portfolio. For example, over time Bitcoin go down, and then you will have a lot of like bigger part of your portfolio in stocks, let's say, and smaller in bonds and ETFs. So say crypto went down and Bitcoin now $10,000 and not $30,000. So at that time you should buy crypto. So keep the rule simple. If you have 5 asset classes, so it should be like 20% each. That was your target allocation. I was thinking about what was the word for that. So keep the allocation is simple, just equal between different asset classes, and yeah, that's the simplest way how you can keep your investments on the same page, same rule, and don't really complicate. And yeah, happy investing. If you have any more questions, just ask me in comments and I will reply to you in the next video, or just in a comment that will spark some ideas for me what to tell you about. And see ya.